Everyone has been talking about recessions recently, and for good reason. Depending on the definition that you use for a recession, we're either already in a recession or we're coming up against one soon. My name's Barney. I'm a realtor with Russell Real Estate, and today I want to talk about the housing market in Northeast Ohio. The first thing I wanted to actually start out with was this article from Redfin, which just came out a few days ago, and they ranked their top 100 US metro markets and ranked them highest to lowest according to their most and least susceptible to experience a housing downturn in the next recession. The good news for Northeast Ohio and the Rust Belt in general is that they typically are the most resilient to a housing downturn. So Akron, Ohio came up on top as the least susceptible housing market to experience a downturn, and Cleveland, Ohio came in at number 5 for least susceptible metro areas to experience a housing downturn in a recession. And partly, so some of the statistics that they use are going to be year-over-year price growth for home price appreciation, because basically you want that to be more slow and steady as opposed to something that skyrockets and goes up 30% one year. That's just usually not sustainable, so what comes up must come back down. They said a share of second homes is a good predictor. Again, same thing. If people are in good economic times, they're buying second houses or vacation homes, and usually those are the first homes that are going to be offloaded in bad times. So basically you're going to have, if you have a lot of people trying to offload properties at the same time, it's going to essentially diminish the value because you're adding a lot of supply, but the demand might not be there. And then the other thing, net domestic migration, you want to see that preferably be a positive number. You want more people coming into the area. Again, that's just going to show that you have steady demand, and that actually was the case for both the Akron and Cleveland areas. Not that we've had huge migration towards these areas over the last year, but we haven't had people moving away either. And with the building rate not going up at a dramatic rate, really we are still undersupplied. So that's what I wanted to show next, was actually the number of active listings. Again, this portion will go over supply and demand, but essentially the number of active listings are still at all-time lows basically. So I just took this back to 5 years, but you could see each month has basically experienced lower year-over-year listings compared to the previous year. So, everybody heard 2020 and 2021 didn't have much inventory. Well, 2022 has actually had less inventory by quite a bit because we haven't had as many listings on a monthly basis. And out of those listings, the number of sales actually hasn't trailed too far behind the last 2 years of data. So even though not as many houses are going on the market, almost as many houses are selling. So essentially what we're seeing there, again, this is just showing months of inventory. We don't have any inventory, which is why we don't have any supply, and demand is going to stay. Even though it's decreased, it's still going to keep us afloat. And basically what I wanted to show there was essentially that because we don't have any inventory, the days to sell on average and the median, which you'll see next, are incredibly low. So we're in teenager stages right now, meaning, hey, we are seeing an average of 19 days to sell. So before basically houses are under contract. So that's the average, and that takes into account all the expired listings and the houses that have been listed on the market for 180 days or 365 days that bring that average up. Because realistically, if we're looking at the median, which is the middle point, we have actually seen less than 10 days for our median days to sell over the past 4 months, which again, compared to last year even, that's just crazy low. So if you are thinking that there's going to be a housing downturn in Northeast Ohio, once again, I really don't see it. Yes, interest rates play a role. Yes, inflation plays a role. But unless we go into a full-blown recession, we're going to be safe.